please welcome to the stage your CHS President and CEO, Jay Debertine.
Thank you. CHS had a strong financial showing this fiscal year at a time when the agricultural and energy industries are challenged by down markets, trade barriers, and extreme weather conditions. These solid results are the thanks to the hard work of many, including our previous Chief Financial Officer, Tim Skidmore. As many of you know, Tim will be retiring at the end of December, and we would like to thank Tim for all his dedication and contribution to CHS. With Tim's pending retirement, I've asked Angie Olsenowski, whom many of you know through the owners' forums and other meetings that we've had, to serve as our acting Chief Financial Officer, along with Dan Lehman as Chief Accounting Officer. Angie will provide this year's financial report. Please join me in welcoming Angie Olsenowski.
Good morning. Thank you, Jay. This morning, I'm pleased to present to you the 2019 financial report. It was not an easy year, as all of you in this room know very well. We faced challenges and headwinds in trade, in logistics, and in weather. But we also found opportunities. CHS had a very good year financially. As we've seen in prior years, the diversity of our business portfolio helped us manage through the cycles of ag and of energy. Before we get started, I need to review this slide. To summarize, some of the business and financial topics we'll talk about today may contain forward-looking statements. Our actual results may differ from those implied by today's comments. These differences may exist due to uncertainties and risks in our business, including those we describe in our annual report. Revenues in fiscal year 2019 were $32 billion. That's slightly lower than last year, due in part to impacts from decreased global trade and weather, but still a very strong year and right in the middle of the 5-year range. Net income for the year came in at $830 million. That's an increase of $54 million or 7% from 2018. The key financial drivers for the year included improved market conditions in our refined fuels business, increased earnings from investments, including our investment in CF Nitrogen. Also in 2019, CHS acquired the remaining 75% interest in West Central Distribution, a wholesale distributor of agronomy products. In addition to those benefits, we also had challenges, and you'll see that reflected in our earnings. Volumes were lower and margins were compressed in certain businesses. This year, as in most other years, our financial results also reflect certain non-operating and non-reoccurring events. Finally, there was significant work done this past year to improve our internal controls environment and remediate 3 material weaknesses. This chart shows net income at the bottom comparing fiscal 2019 to 2018, and now I'm going to talk through the different components that make up these earnings. The energy segment includes 4 businesses: refined fuels, propane, lubricants, and transportation. Energy had a great year with pre-tax earnings of $618 million. That's up $166 million from prior year. These earnings were a result of improved market conditions, which were partially offset by planned maintenance last spring. Also, the prior year's energy earnings included gains on the sale of assets, which did not reoccur in 2019. The main driver, however, of energy earnings was the favorable pricing of Canadian crude oil, which is processed by our refineries in Laurel, Montana, and McPherson, Kansas. This is a chart showing 2 years of crude oil prices. The yellow line is the US benchmark price, and you can see that's ranged between $45 and $75 for most of the period. The blue line is the benchmark price of Canadian crude oil. Starting in late summer of 2018 through that fall, the Canadian oil market disconnected from the US market and traded at a significant discount. This was due to short-term oversupply in Alberta, coupled with lower demand. At times in the fall of 2018, when the price of oil in the United States was over $60, the price in Canada was below $20. And over 60% of the crude oil CHS refines comes from Canada. So you can see the impact that had on our earnings. But CHS didn't benefit from this by chance. We've made investments in our 2 refineries to be able to process the heavier, higher sulfur Canadian oil. And we've also made strategic pipeline connections to be able to access a variety of oil markets. The ag reporting segment includes agronomy, global grain marketing, country operations, processing, and renewable fuels production. Ag had pre-tax earnings of $43 million, and that is down $31 million from last year. There are a variety of things that impacted ag earnings. Weather, of course, was a huge component. Late snowfall across much of our trade territory, followed by spring flooding in certain areas that delayed and in some cases prevented planting. Ongoing global trade issues resulted in generally lower volumes and lower margins across much of our ag segment. And logistics were also a challenge. For example, we'd typically see the first barge of fertilizer arrive in St. Paul off of the Mississippi River sometime in April. This year, the first barge of fertilizer got to St. Paul in July. Likewise, shipments of grain south on the Mississippi were also challenged. With the river closed in key areas, instead of shipping grain via barge to our export facility in Myrtle Grove, Louisiana, we put that grain on rail cars, and that added costs. In light of the current ag environment, we did evaluate certain receivables on our balance sheet, and in 2019, we increased loan loss reserves. But there were some bright spots in ag. The acquisition of the remaining 75% interest in West Central contributed to higher earnings. This acquisition expanded the distribution assets, capabilities, and expertise of CHS Agronomy. Soybean processing margins were also higher year over year at our Mankato and Fairmont, Minnesota plants. Now let's take a look at a chart on trade. This shows 20 years of US soybean exports. Within that total, the blue area shows exports to China, and you can see the decline in recent years. This impacts the volume of grain that CHS sells, but also the profitability of certain assets, like our export facilities in the Pacific Northwest. With China buying fewer beans, CHS is targeting other markets. The reporting segment of nitrogen production is our investment in CF Nitrogen. Pre-tax earnings were $73 million, and that's an increase of $34 million from last year. This was primarily driven by higher UAN and urea prices. Finally, our corporate and other earnings were $82 million. That is a decrease from last year, but last year included the sale of the CHS insurance business. Corporate and other includes wholly owned subsidiaries like CHS Hedging and CHS Capital, and both of those had great years. This segment also includes 2 joint ventures, Ardent Mills, a leading flour supplier in North America, and Ventura Foods, a producer of oil-based, branded, and private label foods. To summarize, our 2019 results showed an increase of $54 million from prior year. Your commitment to your cooperative and the dedication of our employees helped drive these results. So thank you. Earlier this morning, Chairman Scher reported on the board's decision on equity management. As he noted in his report, the board has again designated 10% of this year's patronage-based earnings to go to the unallocated capital reserve. This year, patronage will be issued in cash and in non-qualified certificates. In total, $180 million will be distributed to owners, $90 million in cash patronage, and $90 million in equity redemptions. Of the $90 million in equity redemptions, $63 million will go to member cooperatives. The balance of $27 million will go to individual owners, and that split represents the percentage ownership of CHS. Of the $63 million of member cooperative redemptions, that will include $10 million of 2018 non-qualified equity certificates. The balance of the redemptions will be in the form of qualified certificates. The $27 million of individual producer member equity will be distributed based on requests from those who have turned age 70 or requests from their estates. The board also approved a policy change this year, and that applies to individual members. The revised policy allows those over age 70 to redeem their equity once every 5 years. And the previous policy allowed for individual members to redeem their equity only once after reaching the eligible age. Here are a few key wholesale patronage rates. What you see on the screen is both total patronage and also cash patronage. I'll highlight a few. Premium diesel total patronage will be 17.6 cents per gallon, with a cash portion of 2.8 cents per gallon. For propane, total patronage is 2.4 cents per gallon. And in agronomy, bulk fertilizer patronage will be $6.42 per ton, with a cash portion of $1.03. As we look to the future, equity management decisions will continue to be made with these three things in mind. First, what's in the best interest of CHS and its owners? Second, keeping the balance sheet strong. And third, allowing CHS to grow in the future. Your cooperative delivered solid financial results for 2019. We'll likely face continued challenges in 2020, but we're committed to working with you to navigate those challenges. Thank you so much for your business and for your continued support of CHS. Thank you.